So let's have a look and see what we're going to do in this session. So the first thing that we're going to look at is wholly or mainly. And what we're looking at wholly and mainly is a really, really important concept for BPR to make sure that businesses are not solely or wholly and mainly investing or dealing in property. We're going to have a look at accepted assets as well for BPR and how contracts for sale might affect the BPR. And then finally, we're going to have a look at some agricultural property relief issues as well. So that's our wholly and mainly concept. We're now going to look at accepted assets. So even though we've got a whole balance sheet that is actually going to get potentially BPR because it's wholly or mainly investing, there could still be some assets on that balance sheet that will not get BPR. And these are our accepted assets. So as we can see on the slide, therefore, if there's a binding contract for sale, BPR is going to be denied. But just be careful because sometimes there are hidden binding contracts for sale, and we find these quite often in our partnership contracts and in our shareholder agreements. Now, the partnership contract will quite often state that the personal representatives are obliged to sell the partnership share to the other partners, and those other partners are obliged to buy it because we don't necessarily want our partnership share going to a stranger.